And that's where we're going to go next with Public Ventures President and Chief Market Strategist Lou Basenese. Rate cuts or just hold for the year?
Rate hike. It's coming. Yeah,
Really?
I was contrarian and really way out there about a month or two ago saying this, and the data keeps coming in. I think a hike is next, and it's needed. I mean, one hot inflation number is a fluke, two is a potential pattern, three is a trend. We've got a trend forming. Show me any inflation number that's going in the right direction. You can't. It's just not existent. So I think you're seeing the economy slowing. You're starting to see the impact of those higher rates, but inflation is not under control. People are trying to say it's premature to worry about stagflation. No one's going to admit it because it becomes a self-fulfilling prophecy, but we do have to worry about stagflation at this point.
Elizabeth Warren's going to hate that.
Yeah.
Bernie Sanders is going to hate that. President Biden's going to hate that. There was a piece in the Journal today. Now, this is just a report. Advisors to President Trump want to make the case the president should be in on rate decisions, rate cuts, rate hikes. I don't care about the particular president. But as a guy in the markets, what do you think about that?
Absolutely not. Do not give more power to one localized position. The Fed is supposed to be independent. If you give the president, whether it's a Republican or a Democrat, influence and control over that, it's going to be used as a political tool, not as an economic and financial tool, which is the intention. I vehemently opposed to it. I couldn't think of anyone on Wall Street that would be in support of that.
Checks and balances.
Yes.
All right, let's talk about technology because we had some good earnings come out from Google and Microsoft, but it's Amazon and Apple that everyone is already thinking about next week. What do you think?
Yeah, look, I think Microsoft and Alphabet saved the day. We could have been falling off the cliff if they didn't have strong reports. Everyone needed to see real numbers for AI. No one believes that Meta can turn AI and their AI practices into revenue and profits. Microsoft showed that they can do it. Alphabet is doing it. Now it's Apple's turn, right? Apple, this is the 2 quarters coming up, this quarter and next, where they have the slowest sales for devices coming off the holiday quarter and then the midsummer lull. They've got to prove and lay out a map that they're going to get into AI in a meaningful way. I think the read-through for Amazon's really strong. If you look at the underlying data in cloud, you should see a reacceleration for Amazon. It's been growing at about 12 or 13% a quarter, about half the rate of Microsoft and Alphabet. And then just the strength of the consumer. We saw the report today. Consumer spending, surprisingly, is still strong, and wages are still bumping up slightly. So I think that bodes well for Amazon next week.
So does that mean then the pullbacks that we get in the market are just mini 2-day pullbacks? Are we not? We keep waiting for a big 10 or 20% correction to really get in. Was that it?
I'm not a doom and gloomer, so I don't sit around waiting for 10, 20, 30% pullbacks. Like, no one wants that, right? I don't like dark movies. I don't like dark days in the market. But no, look, this volatility is normal in election years, which are traditionally positive. I think 22 out of the 23 presidential election years ended up positive. You had a lot of volatility until after Memorial Day, and then the markets went on to stage a rally. So this is very seasonal. The adage is sell in May and go away. That's actually been inaccurate for the last 10 years. 8 out of the last 10 years have been positive from May forward. So.
Okay, so a lot of
Can I ask a bullish question? IPO market hot, rubric popped.
Yeah.
You like it? Are we in for an IPO logjam break this year?
Long overdue. Traditional venture is really sucking wind. They've been unable to get out of the private markets into the public markets. Rubric is a great testament to what sells in an IPO. So this is a very hot growth market in cybersecurity. They have strong sales, a line of sight on profitability. I think this is a really good sign. Warren Buffett said, prices put what you pay, values what you get. I think Rubric could be a little undervalued here. If you look at the comps, it should trade for about $50 per share. So no position personally, not a recommendation to buy or sell. Definitely something to look at, though, as the IPO market kind of reignites.
Well, you're welcome back anytime, especially if you keep quoting Warren Buffett. So well done, Lou. Thanks so much. Appreciate it.